A storm is brewing. Far from the gleaming towers of Silicon Valley, something threatens to capsize the AI boom. This is not a story about code or algorithms. It is a story about geography and energy, a narrow strip of water that could pop the AI bubble. The war with Iran exposed a critical vulnerability in tech's supply chain. When conflict disrupts oil and gas, shockwaves hit energy markets and tech valuations. The AI industry seemed invincible, but its foundations may be brittle. Analysts warn, if this persists another month, we enter problem territory. Artificial intelligence is profoundly power-hungry. Models from OpenAI and Anthropic train in massive data centers. These are the digital factories of our time. Running GPUs and keeping them cool requires a constant, massive flow of power. Energy can be up to 60% of a data center's costs. A war that raises oil and gas prices hits profitability directly. Disrupt Qatar and others, the world looks to U.S. supply. Exports rise. U.S. gas prices can follow. Then electricity bills jump. The math of AI shifts overnight. Tight margin operators feel it first. Some pass costs on. Some throttle service. Future build-outs rely on cheap power assumptions. Higher for longer breaks that model. If data center expansion slows, demand for pricey GPUs softens too. The brain of AI is the semiconductor chip. Most advanced chips, designed by NVIDIA, are built in Taiwan. Memory that feeds them comes largely from South Korea. Both rely on imported oil and LNG. A lot of it passes Hormuz. Taiwan reportedly holds around 11 days of LNG reserve. That's razor thin. Prolonged disruption forces costly spot buying. Production costs climb. In shortages, utilities ration. Foundries slow or delay expansion. Fabs may prioritize high-margin clients and products. Silicon Valley hadn't fully priced this fossil fuel linkage. If Taiwan or South Korea slow, AI timelines shift. Profits and valuations follow. Semiconductor fabs need specialty chemicals and gases. For etching, cleaning, and cooling, precision is everything. Key materials like bromine and sulfur pass through Hormuz, but helium is the sleeper risk. It keeps ultra-clean processes stable. Qatar produces 30–35% of global helium as a gas byproduct. When Hormuz is closed, nearly a third of helium is cut off. Qatar Energy expects exports to drop. Recovery takes weeks, then months for shipping to normalize. Even with reserves, fabs ration early to stretch supply. Hyperscalers depend on smooth chip flow. Helium bottlenecks ripple straight to AI capacity. A handful of tech giants powered the market. AI data center spend drove 39% of U.S. GDP growth last year's first 3 quarters. Bubble fears were rising even before the war. This time the shock is physical. Ships and fuel, not just rates or tariffs. Every Mag 7 stock is down double digits from its 52-week high. Microsoft about 32% off. Meta about 25%. Higher inflation risk means higher for longer rates. That compresses tech valuations. Add chip delays and rising data center costs. Earnings get revised down. Because these giants are so big, a correction hits the whole market and retirement savings. Leaders like Jensen Huang, Sundar Pichai, Satya Nadella, Sam Altman, and Elon Musk know the stakes. The war is fought on sea lanes and online. Iran and proxies have targeted data centers, disrupting services. Digital infrastructure is now a legitimate target. Security now means cyber and physical defense against drones and missiles. Costs, insurance, and timelines all climb. AI makes fakes cheap. During the conflict, bogus satellite images spread fast. At the same time, the U.S. military uses AI to sift data and act faster. Powerful tools on both sides create a paradox. Trust gets harder. Expect calls for regulation, brand damage, and cooling enthusiasm. For years, AI felt unstoppable. Analysts say, another month of disruption moves us from price pain to physical shortages. Then comes rationing of energy and helium. Fabs shut portions of production. Markets haven't fully priced this. Delayed chips and soaring power break growth assumptions. Projects count on on-time chips and stable energy. A long war disrupts all of it. No going back to old assumptions. Treat energy and materials as core to tech security. Stress test supply chains. Build strategic reserves. Diversify suppliers. Push efficiency. Smaller, smarter models from OpenAI GPT, Google Gemini, Anthropic, Grok, XAI. We can ignore the warnings and pop the bubble, or build a stronger foundation now.